Ladies and gentlemen, I own Comcast Stock. It's one of the top 3 positions in my value portfolio, and it's had a recent dip here in the last few weeks, partly, I think, because of the data breach that affected over 30 million customers. And while it's never a good thing when one of these data breaches occur, it's not something that I think is going to, by any means, threaten the long term health of Comcast's business. A lot of other businesses have had similar breaches and are still around to this very day. The question moving forward is, does this dip present us with a possible compelling buying opportunity for Comcast stock? We'll get into that in today's video. Once again, welcome to the Fiscal Philosophy YouTube channel. Just because I own Comcast doesn't necessarily mean it's right for you, but here we're going to offer some analysis. The $164 billion by market cap behemoth is a conglomerate in the communications and entertainment space. Now, their revenue growth is relatively flat over the last few years, but over the long run, they do seem to be moving upward and are on a trajectory for, I would say, slight revenue growth in the long term. And I think that's relatively sustainable. They are, in fact, the largest broadband internet provider in the United States. And this is practically essential to modern life as we know it. In fact, to the point where some people compare it to a utility. And I think that, while it may not be quite as essential as running water or electricity, it's getting pretty close. While there's no doubt that cord cutters have hurt the home cable TV business and the home phone service business under Comcast's Xfinity brand, they do offer Xfinity Mobile. So they have mobile phones now, and they do have, of course, the Peacock streaming service. So they are pivoting more towards the habit of the modern consumer in these areas. Also, much like their major competitor and contemporary Disney, they have a thriving theme park business in Universal Studios. In addition to that, they also have the Universal Pictures movie studio, so any box office hits are also a big benefit to Comcast. While there are some peaks and valleys along the way, their free cash flow per share is also growing, I think, at a pretty impressive rate overall. It's quite a lot higher than where it was 10 years ago. Looks like it's about triple according to this chart. Of course, the per share numbers there are aided somewhat by the consistent buybacks that have honestly gotten pretty aggressive as of recently, which makes sense, honestly, because their valuation does seem pretty cheap for a company with such a wide moat. I mean, for Pete's sake, they're trading at an 11 PE, and their price to free cash flow isn't much higher. It's less than 13. So certainly, I think at these valuations, the buybacks are perfectly justified. Businesses with moats like Comcast generally don't trade at massive discounts like this. And I wonder if it's just because of the perception that they're just a cable TV company. Morningstar agrees with me on the wide economic moat. Their fair value of this stock is $60 per share. Now, I don't know if I would necessarily call it $60, but we'll see what the proof is in the pudding when it comes to my DCF calculation. Analysts in general do seem to agree that it's going to be trading at a higher price 12 months from now than today, and therefore probably worth more than the price that it's trading for today, with a low of $44 and a high of $55. So now let's see if this thing's getting ready to pop up like The Undertaker.
Oh my God!
So based on the projected 2024 earnings per share with an 11% discount rate, hitting them also for their high amount of debt and applying a 9% earnings growth rate, which Analysts do expect double-digit growth for the next few years, so I just, assuming 9%, I think is fairly reasonable. It's less than what they've done over the last 10 years. It looks like we come out with about a $48 fair value. Amusingly enough, if you drop my discount rate down to 10%, you get very close to that analyst high of 55. You get 54.13. So their assumptions are probably somewhere in the same range for those analysts that are at the $55 level. And remember, a 10% discount rate is much closer to the standard. And if you drop it again to 9%, which again, there are some when they're coming up with an intrinsic value using a 9% discount rate, this is not unheard of. Well, you get that Morningstar fair value estimate of about $60 per share. My own cost basis was roughly $36 on this business, and I do still think at today's price they're slightly undervalued, and this is much more than the cable TV business that people think they are. And I think if the price is temporarily down because of this little data breach situation that they're dealing with, well, it's not little, but a lot of other businesses have dealt with similar. I do think that it possibly presents a good opportunity to get a solid business with a wide moat at a discount to what it's actually worth. Be sure to let me know if you invest in Comcast. Generally speaking, my videos on Comcast don't do very well, but once again, I think this is a great opportunity and it is one of my top 3 stocks. So I feel like for the interest of the channel and transparency, I really ought to cover it just as often as I would any of my other top 3 stocks, even though this one gets the least views. Make sure you subscribe to the channel, hit the thumbs up for the algorithm, and check out Discord and all that. See you later.